Testing 1 2, testing 1 2. Good evening, everybody. Just doing a quick audio check. First of all, if you can give me confirmation in the chat that you can hear my voice and see my screen, and we'll proceed ahead with today's session. Are we good? Good to continue? Fantastic. All right. So as always, a special thank you to Prime XBT for once again sponsoring the weekly live streams. As always, anything said in today's video is not financial advice. It is just my view of the market. Okay. All right. Awesome. So before we proceed, I just want to give you a quick update with regards to the group that we're going to launch in a few weeks' time. So just a quick summary for those of you who've been bombarding me with messages in the DMs. So to give an update, the last public stream from me will be next Sunday. That's Sunday the 23rd. That will be the last stream until the foreseeable future. I'm not sure when I will be back. It could be at some point towards the end of Q2. Maybe I might do the odd one-off stream here and there. To be confirmed. But yeah, today is the second to last stream, and next week will certainly be the last stream, okay? And then we move over on to the 4-week mentorship, which I'm doing in partnership with OK Exchange and Prime XBT. So in terms of the group access, let's just kick off. A lot of people asking me where are the registration forms. So the registration forms will be made available later this week, most likely tomorrow evening. If you come back to this video, you'll see a link to the Google Forms in the description of the video. So make sure that you do not click on any comments or any replies suggesting to sign up. I will leave a Google form for you guys to fill in and to follow the instructions on how to get onboarded. And for those of you who are struggling with the onboarding process, that's not a problem. I'd like to get everybody on board. So whatever teething issues are present, we'll get them resolved, okay? One by one, if we have to do so. So the onboarding process will start on the 24th of February. It's going to be running on Substack. So I do advise all of you who wish to join or wish to register to set up a Substack account. And then the onboarding process will happen as of the 24th. And then we actually go live on Sunday the 2nd. I was hoping to start on the 24th, but I realized with the teething issues, I probably need to give perhaps a little bit more time for the onboarding process. Okay, so sign up is via OK Exchange or Prime XBT link. So you can find those in the corresponding videos, whether it's a stream sponsored by Prime or it's a stream sponsored by OK Exchange. The criteria is that you deposit 500 and you hit a threshold of a minimum of $500 of trading volume. And like I said, I'm not looking to profit from this. All proceeds will be given to charity. And like I said, this is just for me to give something back to the community before I take a fairly decent break from most aspects of social media and streaming. So moving forward, just to summarize what the course is going to be about, we're going to talk about my 2025 trading manual watered down, just to give you guys the foundation of what a trading manual looks like. We'll look at the trade planning and life cycle that I personally go through each and every week when I'm trading the markets. And then we'll look at trading systematization. So basically, what does a trading system look like? What does a trading strategy consist of? How can you go about developing your own strategy? And like I said, we'll touch upon the basics of price, time flow. We'll talk about execution strategy using footprints as well, because that's certainly one thing that I've never really covered or talked about on stream. I've always focused on the aspects of price action, because ultimately price action is what's key for me. Understanding the context, but what I want to do is give a granular overview of how I actually execute trades using footprints, okay? Particularly for Bitcoin, not so much for altcoins. And then we'll cover trade setups as we normally do on these weekly streams. Overall, looking to run 2 to 3 private streams or recordings per week. We will bring back the Sunday market reviews, which will include the global markets outlook and the macro outlooks as well, like I used to do. We'll talk about the basics of auction market theory, which is a precursor before we go into order flow, footprint, market profile, etc. All right, so that's it in summary. So for those of you who are having issues with the sign up process, like I said, if you just bear with me another day or so, the Google form will be available. So if there are any issues, there will be an option for you guys to leave a comment as to what those issues are, and I will forward those requests over to the team and get them to work on those individually on a case-by-case basis. Okay, are we all clear? Any questions around that? Is that fairly straightforward? If not, then just leave a comment in the chat, or after the video, leave a comment on the video, and I'll pick it up. Okay, so I think today's session, really, nothing has changed significantly from when I last streamed. Just give me 1 second. Yeah, so yeah, basically, look, it's a case of where, for those who are asking in the chat, you have to deposit an amount of $500 and then hit your trading threshold. So basically taking a trade, you know, if you want to open it, close it, whatever you want to do, it's entirely up to you. But that's kind of the criteria that has to be met for you guys to be eligible. And like I said, the other thing that I should probably make you aware of is that you probably will need to KYC. So if you're uncomfortable with KYCing, then unfortunately it's not going to be for you. Okay. No, you haven't missed much, Khalil. I've just literally started. So let's look at Bitcoin to begin with. We'll start off on the higher time frame. I think the last stream that I did was on was it February the 4th, I believe. So it was round about here. We had the aggressive sell-off on the 3rd, and the next weekly open, we had the candle open, okay? So it was round about the February the 4th that I last streamed, and if you recall what I said, my view is such that we've got the December highs, we've got the December lows, somewhere around here. That's the range that I'm essentially focusing on. And ultimately what I'm looking for is that I'm trying to be objective about price. Yes, I can appreciate that, you know, the market isn't really looking great at these highs. Yes, Bitcoin is holding up fairly well, but there seems to be a lot of concern about downside risk and Bitcoin breaking down. And then you've got the other half of the audience, which is talking about, we're still in the bull market. This is all consolidation before we go higher. My honest opinion, and being very, very objective, not speculative, but being very objective, is that I don't know what's going to happen next. And all I can do is, as a trader, is that you won't see me talking about the fact that Bitcoin is likely to go to 68,000 next. That's it, the top is in, because it doesn't really do anything for me. It's not actionable. All I can look at is what is the information in front of me at this very moment in time, and which are the levels that I can interact with where I need to see a reaction for a possible trade setup. That's all I'm looking for. Okay, let's just assume that I don't have any positions and I'm looking for a trade setup. So we talked about last week in terms of this demand zone being key. I don't mind price revisiting lower down into the 90K region, potentially for a reaction. And the key to this was the fact that, look, I think there's a case where if you look at where price is in terms of the lower time frame, it wouldn't surprise me if we see some of this getting backfilled, okay? Potentially down into the range quarter. So if you look at the previous trading range, we've got the December lows, we've got the December highs, and we've also got the mid-level over here, okay? That's essentially a key pivotal point. Now, what's important about this key pivotal level is that if you look at the time spent above the 100K level, it was very short-lived. Where did price reject from? It rejected from that 100K level. And like I said, if price is likely to get rejected from here, then we could see a retracement going back down at least towards, if you look at the area where the majority of price action has occurred, it's this region here, okay? Because if you look at the highs, look at the lows, again, we've just been oscillating in this zone here. So the question is, whether I get the trade setup that I've been looking for, and I've been very, very patient on this. I've not had anything to action. I've had nothing to trade on Bitcoin. It's been fairly stale. And what I'm looking for is effectively, if I was to take this as a range quarter, again, it's a fairly decent level again, which is quite pivotal. You can see it's acted as support, and again, some level of choppiness, but there is enough contextual environment to suggest that this could be one of the key levels, okay, where I could be looking to do business if I get a trigger point. So just to reiterate, there's two areas that I'm looking to trade essentially on Bitcoin. Long story short, either we're going to get a shallow pullback into this zone here, I get acceptance back above. That could be one trigger point, but I need to see acceptance fairly quickly back above the mid-level, okay? I want to see buyers step into the market. It's a term known as initiation, where you can see on the footprints that buyers are stepping into this aggressively. Shorts are getting squeezed out of their position locally. Whoever's been shorting this, that's essentially what I want to look for. That initial impulsive move up, initiation, shallow consolidation, and then we see continuation higher. My favorite setup is price trading lower down, below this lower bound, potentially getting close to or taking out this low here. Whether we take it out or whether we just stop short, again, I covered that scenario in last week's video in detail in terms of execution strategy. So please, I'm not going to repeat myself. If you wish to, I would highly advise you to go and watch that video, because I covered all this scenario in detail, in granular level in terms of price action, how I would look to execute the trades, and what are the scenarios that I'm looking to trade. So overall, there's not really a great deal to talk about, unfortunately, in Bitcoin. I was hoping that we would see further price development. But when you look at the daily range, when you look at the daily time frame, it's not been great, if in all honesty. It's not been great at all. So moving forward, sorry, just bear with me a second. Moving forward, currently where we are, so I've just switched off the replay tool, kind of reiterated the setup that I wanted to see before, which I covered on the previous stream. Now, where are we? 1 week later, 10 days later, I streamed on the 4th, 12 days later, we're none the wiser. Okay, I've not had anything actionable. I've not had any setups trigger just yet. And I'm not sure what's going to happen, in all honesty. I couldn't tell you. We just seem to be in this period of low volatility. But I've defined the levels, and that's all I can do is just wait for the reaction, wait for some form of whether Bitcoin drops into this lower bound, runs the lows here. If there's any stops here, they get taken out. Reclaims back inside. That's the trigger. Like I said, we want to see initiation. The second part is, well, what if we get close to this level? This is the second zone where I want to do business. Or whether we get an aggressive, fast move down with momentum, with aggressive selling at the lows. Late shorts get trapped. Anybody who's holding their longs puke. And then price reclaims back above this key low here or this key low here. They're the two swing points. You've also got December's low. So could this be an under and back over? I'm not sure. What I'm leaning towards in terms of a possible scenario is such that I'm not sure if we're going to get the trade set up. So if it is going to be a fast move down, I want it to be short-lived and get back inside, okay? If it's just going to move down very quickly and hover around here and start rolling over, that's of course a concern. Then we probably could trade much lower into this zone here. But until this scenario happens, I can't say for certain that we're going to break down. And equally, I can't say for certain that this level is going to hold. All I can do is react to what the market presents, such that even if I took this trade on, assume that we do get an aggressive seller for whatever reason, price reclaims, I take the long, my invalidation's here. If this starts rolling over, I have to cut the trade. Very, very tight stop. The reason I have a tight stop is because I talk about a 3-strike rule. I'm happy to take a small loss. I don't have to take a 1-hour loss and wait for my stop to get triggered down here. If price shows me strength and such that this was kind of a run of the previous swing low, and we've decided to run these lows before we get back inside, I'll just step back into the trade almost the same trade setup, just a slightly different reason to execute the trade, because this was a stop run on these before price reverts back up. Okay, alternatively, like I said, if I'm wrong and price stops me out, or I cut the trade here and it rolls over, then I have to switch context and potentially think about either longing from lower down, or if I see enough reason where price rejects off this level, underside retest, rejects again, then I'll have to ride the short down into wherever price wants to trade next, into this 80k level. Okay, but like I said, that's kind of the we're a few levels away from this scenario playing out, but it's just something that I want you to keep in the back of your mind. Now, what I'm thinking, and I'm still leaning towards this possibility, and again, this is just purely, it's not objective, it's more just gut feeling. It's more what I think could happen. But is it really being objective? No, it's not being objective. What I'm leaning towards is potentially the lows holding around here somewhere. Just somewhere in this zone here where we don't quite necessarily come down and take out these lows. But what we may do is essentially take out this set of these set of lows here, okay? So I've just been waiting for something substantial, because if you think about this as a range, all I'm looking for is price to come down, tap into 93, 92, get back inside that previous range. That should be enough of a invalidation point. Let's go higher, okay? Into that third drive, higher up. And then we'll see what happens, okay? Whether it's a shallow pullback, continuation higher, or whether that was it. That was the third drive. 1, 2, 3. Okay. You've probably seen the Wyckoff schematics flying around. Could happen, may not happen. Okay. I don't really care. All I need to see is what kind of reaction I'm going to get should price drop lower down. Now, the question is, what if it doesn't? What if price doesn't trade lower down? What if price doesn't run this local range low here? That's fine. It's not part of my system. It's not part of my strategy. I've already explained my current position where I've been long on spot from the lows in September, and I've hedged out where we talked on stream about looking to potentially short this or hedge out, and that's essentially what I've done. So I'm still delta neutral because I don't have anything definitive as to what the market is likely to do next. But what I do know is that should the price trade into the zones that I wish to see it trade and give me a reaction, and I'm looking at the flow and the footprints, then I have a reason to execute the long. I'll close out my head short, which is against my spot, and I'll be aggressive in looking for longs in the market. Ideally, that's the scenario that I'd like to see. Okay. All right. Is there any questions around this? Now, in terms of the market, what does give me a level of concern is if price cannot find acceptance above this 104k level. And what do I mean by that? What I mean is that should price trade above this level again and reject and then close back inside, I think that then increases the probability that we are very close to an inflection point and a potential reversal point in the market for a corrective move. Okay, so if we trade higher, watch for the sentiment to become bullish, and the minute we reject, this is what you want to be looking at, this 104 level. Okay, so that 104 level is essentially coming in around here. So are we going to get a push up, drop lower down, push up, reject, close back inside, and then now we'll likely see continuation lower down? That's just the downside risk that you have to be aware of. Just want to quickly move on to the stocks. Looking at the weekly, one thing I've talked about on the previous streams, would anybody like to chip in and recall what I said about the weekly stock and price trading into December's low? I went over this in detail over the last few streams, what to look for, what to observe. And that, look, if Bitcoin can consolidate at this level here. And the weekly on the stocks is oscillating at the lows, but there's no continuation momentum. As long as we don't see that momentum in breakdown or acceptance below the 93k level, because if you look at price, again, this is another key level to mark out on the chart. I'll do this in blue. But if you look at the weekly time frame, we have not yet had a single weekly close below that 93k level. So again, another reason why just using the high time frame, I've marked out the lows on December lows, okay? The lowest weekly close within this range is at 93. We've got the December highs at 108. They're the key levels that I'm looking to play and pivot off around, okay? And then we've got this key mid-level at that 100k zone, okay? That is essentially the range on the high time frame, the key levels that I'm looking at, and that's on a weekly basis. So like I said, if there is a reason for me to long price, it's going to be in this zone here, between that 90 to 92, 93k level. If price does take out this weekly low, acceptance back above it, that's going to be a trigger for me to go long, okay? With an invalidation, like I said, it can be below here, it can be below here. It just depends on what the market, are we going to swing fail this low, or are we going to swing fail this low and find acceptance? That's where, as a trader, you have to react to the data points that the market gives you, okay? I'm not predicting what's going to happen. I'm literally talking through the scenarios where I would be interested in doing business. And I've explained why, how, and what I'm looking for. So I'm looking for price to take out a previous low. I'm looking for shorts to aggressively start piling in. But passive bids are absorbing any aggressive selling. Sellers are getting exhausted at this level. Price to then show me strength to reclaim back above 94 or 91.5, similar scenario. Run the lows, get back inside. I want to see initiation, buyers stepping in, shorts getting trapped. They're going to unwind their shorts. They're going to puke. Price pushes higher, okay? So that's all I can do. And there's a very good possibility, right? And this is where you have to accept as a trader that you may not even get a setup, which is absolutely fine. If the market doesn't give me the setup that I'm looking for, then I have nothing to act upon. And that's where being patient comes in, having discipline comes in, but also having a plan B that if you wish to attack the market aggressively, where are you looking to get on? So that's something that you guys need to think about yourself. You don't necessarily have to follow the plans that I'm looking to take. Some of you may wish that, all right, if we don't run the lows, maybe for you guys, a point of getting on board would be acceptance above this mid-level here. Okay, that's valid. If that's part of your system, you go ahead and do that. For me, it's slightly choppy here. Again, like I said, I like to look for those aggressive participants getting trapped in the market and price reverts the other way. So it's more of a mean reversion strategy that I try to play. That's one of my favorite strategies, okay? Yeah, like I said, I've just explained, what if I don't get the retest? And fine, it's not my setup. I don't have any edge. I know what works well for me, and I know what works well for my trading system, but there's many different styles. You can come up with your own strategies. You may even be a day trader. There's plenty of trading opportunities within this if it suits your system. But this does not suit my system because, one, we're not even at the mid of the range. We're not at the lower bounds of the range. So I don't have anything really to action. And I know for a fact that over the past, my trading data that I look at, the qualitative and quantitative analysis tells me that most of my best trades when it comes to range bound environment is at the extremities. But not only is it just at the extremities, it's then knowing, right? This is a key point. It's not just about, oh, prices at the range lows. It's about knowing what I'm looking for at this moment in time in terms of the flow, the footprint, where the shorts are aggressively opening into passive bids. And if they are, what's the possibility that they're likely to going to get trapped? Or are shorts being aggressive passive bids are unable to absorb the aggressive selling, price consolidates, we get a breakdown, underside retest. Anybody who's long in this now is looking to get the fuck out. This now caps price to the upside because you're probably looking to get out break even, and there's the initiation for the continuation lower down, okay? Because anybody who's long in this is now offside. They're waiting. If they haven't been stopped out, they're hoping to get back out of the market. If they see rejection, what do you think they're going to do? For every long that you open, to close that long, you have to open it on the opposite side of the trade, which is going to cause what? Cause selling pressure. So shorts are piling in. Longs that are offside, they're going to be closing, and that's what causes these moves down, breaking out of that range. I'm not saying this is what's going to happen. I mean, just explaining the dynamics of how markets work and essentially what you need to look for in terms of risk to the downside if you are looking to play the long scenario, which I am. All right. But overall, from an analysis point of view, not from an actionable point of view, I do like how this weekly stock RSI is hovering at the lows, and yet price is still contained in here. But again, another way of looking at this is if we get a break of this trend line here, then we are in a level of shit. So just something to be wary of. In terms of the daily, I can't really gauge much from the daily, whether this is going to roll over one more time and then we might get our setup. Okay. Are we going to trade the extremes on either side? That's what I'm hoping we do. I hope we remain range bound, but we'll have to wait and see. Moving on to the bands, the trend scanner. Like I said, yes, it's a bear cross on the daily, but as I've alluded in the past, that we are hovering under the bands, okay? We're not a million miles away. We're not seeing expansion away from the bands, okay? We're just hovering under the bands. So expectations for the week ahead, continuous chop, continuous grind. I'm not really expecting too much to happen in the market. I think there's every case that, like I said, we could come down and take out these lows. And in doing so, does this establish the early lows of the week before we get acceptance back inside the range, okay? If we do, then I think it's probable that we end up trading the higher bound of the range, okay? Back into that 101s, that key mid-level that I keep talking about. That's what I feel the range is likely to be until we get real aggressive initiation and expansion above this mid-level of 100k. Then we can probably see a probability that price will trade back into that 108, 109, 110, maybe higher over the next few weeks into this level. Then the key question is, okay, if we do that, is this likely to be the third drive? So we get a pullback into that level, a reaction, continuation higher, or that's it. That's all we get, okay? Is that all we're going to get before we see a larger corrective move down, taking out the opposite side of the range on this side here, okay? Just something to think about. But these are very, very good trading ranges at the extremities, whichever way you look at it. But like I said, we're a long way off any of this happening just yet. Okay, for now, this is all we've got to work with. I'm just looking through the chat, see if there's any questions. Why 104k level, not 106 or 102? Well, for me, why the 104k level? What's that one? Oh, because like I said, if you look at the weekly chart, and this is why I always talk about mapping out the charts on the higher time frame, is have we had a weekly close up of 104? So Pavel, I hope that answers your question. Have we had a weekly close up of 104? No, we haven't. Have we had a weekly close below 103 over the last several weeks? No, we haven't. So where is the market contained? It's contained between these two levels. So what I'm basically saying is that if you look at these wicks here, buyers are stepping into the market. If you look at the wicks at the other side of the range, sellers are stepping into the market. Okay. Classic range trading, mean reversion play. You long the lows, you short the highs. Okay. So the question is, are we going to get one more push down? If so, we want to see acceptance back above this key zone. Take the trade on, mean reversion trade, continuation higher. Are we going to run the highs or get close to running the highs here? A rejection back inside, mean reversion trade back to the mid. That's what I'm looking for until there's a clear direction of continuation higher or continuation lower into a trending environment. Okay, but we haven't got a trending environment. And that's a mistake a lot of people make. When they latch onto a trade, they're looking for that big expansive move out of a range into a trend. But it doesn't happen. Price ranges 80% of the time. Sorry, price ranges 80% of the time, if not more. And trends far significantly less. You've only got to look at the examples here. Is that this was May 2022. This is the range that we had until October 23. A year and a half of almost range-bound price action. Your trend was this for several weeks. Consolidation again. 1, 2, 3, 4, 5 weeks of trend. Long form consolidation again. 1, 2, 3, 4, 5, 6 weeks of trend. Consolidation again. So we spend far significant more time in a range than we do in a trend. But the reason why people get chopped up is because they'll take a trade, they'll hold on to it, thinking that the market's going to do this next week. But they get chopped the fuck up because all the market is doing is just, it's in a bracketing environment. Trading the highs, trading the lows, trading the highs, trading the lows, trading the highs, chopping everybody who's in the middle. Really, the best opportunities in a range are at these extremities, okay? This cycle is an absolute disappointment. I disagree. I don't think it is a disappointment. I think it depends on what your expectations were. If you're basing your expectations on previous cycles, which many people do, people talk about the 4-year Bitcoin cycle, the 4-year altcoin cycle, then you're being very subjective. You're basing future performance on what's occurred in the past. And I don't think that's the right way to approach markets. You have to approach markets objectively. Look at what the market is telling you. Look at what it's giving you. The market doesn't owe you or me or anybody else anything. Okay? The market is the market, and you just have to respect what it gives you and what you can trade and whether you can execute your strategies. Yes, we all want to buy altcoins and hold them and watch them do 20, 30, 40 X's, but how often does that happen? You know, if you're looking to play those altcoin cycles, then I can understand why it's been a disappointment for many. You know, my own spot bags haven't done great. They've rallied 2, 3, 4x, and that's it. I've probably pissed away 30, 40% in terms of gains on the way down because of the relentless sell-offs that we've seen in altcoins. But ultimately, from a trading perspective, I've been very, very happy with the volatility that's been on offer until of late, where it's been an absolute shit show this last week or two. Jamo, you say discipline is hard. Is it really hard, or are you just being lazy? Nothing's going to come to you if you're not going to put effort into this game. It's not easy. It never is. It never was going to be easy. Discipline isn't hard. You're just making it difficult for yourself. The only one stopping you from being disciplined is yourself. That's the honest truth. There's no two ways about it. When you come to that realization and you have a system in place and a strategy that you're looking to trade, discipline will hopefully come as a result of that process. But if you don't have a process, you're not going to have discipline at all. It's like, think of bodybuilding, think of going to the gym. If you want to be a pro athlete, you've got to have a routine. You've got to get up on time, on schedule. You've got to turn up every day to training, right? You've got to eat well. You've got to sleep well. You've got to journal your progress. Why is it any different in trading? If you're looking to be a top trader, you've got to have a routine. You've got to have a system. You've got to have a balance of your lifestyle. I don't think it's healthy spending 16, 18 hours a day in front of your screen. And if you are, genuinely ask yourself, how efficiently are you using your time? I've done it. I've been there. I used to stay at the screen 16, 17, 18 hours a day, trading away. I didn't have any system. I didn't have any process. Most of my trading was very impulsive. It was emotional. I lost a lot of money. I made a lot of money. I've blown accounts. I've done it. All because of the fact that I never had a process in 2017, 2018. It wasn't until 2019, well, the end of 2018, where I sat down and I actually created a trading manual, a trading process. Which platform do you use for footprints? I use both Sierra charts and XO charts because I'm starting to trade equities again, or SPX, just on the side without really talking about it. Most people are in alts. Yes, I'm in alts. Like I said, I only have 10% of my entire portfolio in altcoins. If I'm really honest with you guys, I'm delta neutral on Bitcoin. I have 10% of my portfolio in altcoins, and the rest is cash. I'm 75% in cash, if that. Considering I'm delta neutral on Bitcoin as well, so that's kind of a zero-sum position. I'm just going through the questions. That was cold. We have to hear it. Yeah, it's just the way it is. Yeah, Jamie, I get it. You know, we all like to shit post. I've really cut back on the shit posting these last 12, 18 months just to focus more on trading. And I think ultimately, it's not just about discipline though. Discipline is everything. Discipline is you sitting down, creating a trading strategy. And that's what I want to do. Honestly, this is what I really look forward to do, because I'm not here comparing myself to other paid groups or anything, but I just think, look, I've been through, you know, over the years, I've been in markets, I've been trading. I believe I've been, you know, fairly successful, and I think I'll go on to become even better. I've been in this game for 9 years, and I think my best years are ahead of me. I really do. And I'm at this point in trading where I just feel as though I can just lock myself off from social media, just consume data and news and those Twitter accounts that I think add value, but by no means do they influence my trading decisions. You know, they'll probably put a good macro viewpoint across, which I might be interested in. They may be talking about flows on the day. That's fine. But nothing and nobody influences my trading decision apart from myself. So one of the things that I want to do is go through the process, creating a trading manual, what that looks like. And what I've done is I've been preparing this material for you guys in such a way that I don't want you to be overwhelmed by looking at what I'm currently doing now, 9 years in. I've really stripped everything back, assuming that I've been trading for 2, 3, 4 years. So I've really taken a more of a foundational approach to what a trading system should look like, what a journal should look like, how you should manual, how you should plan, how you should prep. Let's talk about the basics of not just price action and charts, but understanding real-time data points, okay? A candle on a chart really doesn't tell you much, okay? What will tell you more about real-time data point is we've seen people talk about market profile, okay? Market profile isn't real-time data to some extent. Market profile gives you context. So we'll talk about volume profiles, we'll talk about market profiles. Not that I use it extensively, but that's one point that I want to touch on. Where execution comes in is more around footprints, trading stacked imbalances. Okay, that's what I like to look for. And then in terms of footprint strategies, you've got delta unwinds, okay? You've got absorption. There's exhaustion as well. So we'll cover all the various facets of using footprints and how you can incorporate one or two of these strategies with price action at these extreme, whether it's double tops. Likely, you would have found that if you look at price action here, at these highs, This is essentially almost a double top. I'm not talking about a double top pattern where there's a neckline and it breaks down. I'm just talking about the fact that we've tagged this level twice. You would have seen aggressive longs piling into this. They got trapped. Price puked the other way. Same here. Aggressive shorts opening. They got trapped. Delta unwind. Price goes the other way. So there's subtlety in like absorption, exhaustion, delta unwinds, type of footprint patterns that you're going to see, like stacked imbalances, how to read a footprint chart, the various types of footprint charts. So we'll cover all the basics on those sessions. I just don't talk about it on stream because it's just going to probably confuse a shit ton of you who have no basic understanding. So we'll cover the basics on the core concepts around there. And how all that ties into price action. All right, let's move on. I don't think there's much else really to cover on Bitcoin. I think the other thing that does give me a level of caution, again, like I said, I am being aggressive. I am looking for longs. Just when I look at the weekly MACD, this does get me questioning whether we are in a spot of bother. This was in April 2021. This was in November 2021. You can see the gradient. Okay. You can ignore this. This is all just a range bound environment. It wasn't a trend. Again, April 2022. Nothing really happened. Marked to the top again. If you look at this, it kind of marked the top again. Just something to be wary of, okay? Just if this starts expanding, what's going to happen here? Are we going to get a divergence and then break down? Or are we going to run the lows and then go back to the highs? Or is that it? Are we just going to break down into this next level of support? Honest answer, I don't know. But like I said, this is not really anything actionable. It's on a weekly time frame. What's going to be actionable is what happens here. Okay, that's the key for me. What else? Let's look at the heat maps. We can see that, yeah, there's a decent level. Again, this all lines up for me. That 93K level is going to be key for me. And this is where, again, in real time, I look for price to come into this zone here, right? Let's just assume that we've got this low here. So this is the range that I talked about on the actual charts, okay? Just assume that's the range there. So the question is, are we going to run these lows here and here and trade into this zone here? What I'm looking for, again, when I talk about the what, where, why, and how, is for price to first of all trading into this level. Secondly, are shorts aggressively piling into this zone here? Are these passive bids absorbing price? And if so, what was the momentum or speed into this level? If this can hold with large aggressive selling on the tape, using Agger or watching the DOM or the footprint, can I see a reversal back inside this value area of where price has been trading for the last 10, 12 days. Is this all just a deviation outside of this local range before price gets back inside, goes to the higher bound of the range? That is a fairly good trade setup. Forget looking at the price on the right hand side. Just completely ignore the price scale. Purely from a structural perspective, if you understand anything about position sizing, risk to reward, then you'll know that you can probably get a 3-4 hour trade here. Because your trigger point is essentially going to be this. Your stop is at this low. The mid of this move is here. You could effectively chalk up a 1.5 2-hour trade, potentially 3 to 4 hour trade, depending on how good your execution is and where your stop is over here. So ignore the price scale. Fuck thinking about percentages. Or Bitcoin moved 1%. FX doesn't even fucking move 1% a day. And people are making good money because they understand the importance of correct position sizing and risk to reward profiles. So that's the key emphasis that I want to talk about. That look, there could be a very, very good trade setup, but the key to all of this is understanding and being able to read what the fuck price is doing here. Not looking at a candlestick and you haven't got the slightest idea as to what's actually happening under the hood. You need to have an appreciation of what's happening under the hood. Then you see acceptance. Then you'll recognize that there could be trap traders here. This could be a decent long. Execution, stop at the lows. You want to see these shorts that have opened here, or potentially longs that have puked their positions after building. They're offside. They start adding to this short momentum. They've got shaken out. Price goes up. Okay. If price breaks down, rejects on the underside, or comes back inside and then rejects, then you can say, right, we could run the other low, which is round about I can never seem to grip the chart. So that you get the point. The point I was trying to make is that are we likely to run the other lows? Okay. If we get rejection and we can't find acceptance back inside this range again. So just another way of thinking of low time frame execution there. Oh, there we go. That's why. There we go. Okay. Does that make sense? Is that clear? Yeah, I've done it. Yeah, thank you. I don't really scribble on here very often, but hopefully you get the gist. So just understanding the context of the lower time frames is key for understanding what price is doing, being able to read price at these lower time frames to understand what you need to see to get into a trade, to give you that conviction to get into that trade, okay? Normally what you'll find with me is generally on the streams, just to keep it level, is the basics, the foundations. That look, should price trade into this level here, you're giving yourself a probable chance of taking on the trade, but you don't really know what happened here. You need to have an appreciation of what happened here and the context of this range here. Okay. So these are some of the things that I'd like to touch upon in the sessions that we have in the group. So looking at market profile, looking at potential single prints, looking at trap traders. And again, like I said, talking about the various footprint strategies that I use myself for trading Bitcoin. All right, let's go back to what we were looking at. So this is on the Binance USDT pair. Level of interest, whether we trade into that remains to be seen. And then we've got the Binance spot pair. Again, fairly balanced. If you look at the asks, decent depth all the way up to 110. It's going to take some serious effort, I feel, to trade through 110 and find acceptance above it. And equally, we've got support all the way down to around about that 90k level. Below there, it's we'll have to see how the books recalibrate. But essentially, again, I feel as though this whole area between 89 and 92.5, 93 is what might be key before we get a move up. It may not even run this low. It may not even run this low. It may just stop short. And then we trade into these asks here. That's what I would love to see as a trade setup. I really do hope we get this. All right. Okay, cool. So let's have a quick look at Solana, and then I'm going to wrap up the stream. I think for Solana, again, I feel as though, and again, this is where I'm openly going to put my hands up in the air and say to you guys, I could be wrong. There's every chance I could be wrong on this. Okay? This is not actionable, what I'm about to say next. Could the top be in on Solana or the near-term top? My honest opinion, I think yes. But what does that mean? If I'm saying this, and now I'm telling you that I'm looking for a long off this zone, am I being bullish or am I being bearish? Or is it something else? What have you ascertained by, first of all, I'm making this statement, but yeah, I'm telling you that I'm looking for longs here. What have you understood from that? Correct. I'm being objective. Well done, bro. You've nailed it. I'm being objective about price. Yes, this is a subjective view, that this is very subjective, right? But I'm being objective in the sense where I'm looking for long opportunities here for a reversion play back to this level. Or alternatively, if I feel the top could be in on Solana and I think we're heading lower down, I don't have to force this trade. I don't have to take this long. I could simply say to myself, right, I think there's a shift in context here. I don't wish to take this long because the fact that if you look at price across the board, okay, would you or would you not agree that this is significant resistance? Would you not agree in terms of the context, the fact that we've traded at the all-time highs and we've traded above it, and what has price done? It's rejected off that level. Once, twice, 3, 4 times. We've had 4 attempts to close above this weekly level, but not once have we managed to do that. So what I said subjectively about could the top be in? I think yes. But what I'm being objective about is, could I get a trade setup which allows me to trade this back up into this zone here, 240s? Maybe if I'm lucky, I might get 250s, right? And if this rejects, do I get the short in down to, well, looking to trade it back towards 140, not in one trade? That's being objective. I need to see price rally into 260s, 240, 260. I need to see price reject. I need to see longs piling in at the highs. I need to see Bitcoin reject from its highs. I need to see price start rolling over. That's being objective. Yeah, I was being subjective where I said I think the top could be in, because being subjective is a loosely held opinion, right? Let's assume that Solana does reclaim back above 260. Now what? Whatever I said or whatever statement I made means fuck all. I can still trade this. I could still be in a long, trading it higher, yet my subjective opinion is wrong. But yet I'm making money. So all that matters is, can I identify good trading opportunities that fit my system and that I can look to execute trades? And if I'm pissing against the wind, assuming that I'm counter trend trading, which could very well be the case here on Solana, right? I'm hoping that we find a level of support holding here. Now, the difference in this, the reason why I'm looking for longs is I'm not hitting longs straight away. The way I'm looking to play Solana in this instance is that, look, we've had some fairly decent reactions from this level here. 1, 2, 3. Now a fourth reaction at this level, if it's just this, and that's all we get, I need to see more than this, okay? Yeah, it's not a bad level to get in at 180s, stop at the lows. But really what I would like to see to give me conviction on the idea that we could trade back into that 245 level, which is around here, and resistance up here, is all right. I've got this level of lows down here. If price can trade into this, gets back above, then shows me acceptance above 188, then I think it's game on, that we probably run to these highs here, okay? So point number one, I don't want to be knife catching any of this shit because I recognize I'm going against the trend. Point number two, I want to see price maybe run this low, maybe it runs this low, I don't know. But I want to see price at least swing fail these lows, close back above it. Now I'm interested in thinking about longing with an invalidation at the lows here. What I then want to see, assume that I execute the trade, I want to see price reclaim this previous 1 hour range, low time frame range, okay? If you drop down onto the 1 hour time frame, I want to see this be the deviation. I can execute here, it claims back inside here, I can look to start running the trade back to the mid, then to the highs. And then maybe we get overextension at the highs. Anybody who's shorting this is probably going to get stopped out. If there's no rejection, late long start piling in, and then you get the reversion back down again, okay? That's all I'm looking to do. Purely level to level trading, being objective, looking for the data points that I need to see, and then reacting accordingly to whether my system allows me to take the trade, and looking at the overall context of the market, whether I can take the trade, okay? That's what's more important to me. Not this bullshit speculative idea that the top's not in for Solana. Solana's going to go to $500 by the end of the year. What does that actually mean? Is it actionable? No, it's not, okay? Can you confidently, right, buy Solana here and call for $500 by the end of the year? Are you really confident on that idea? And assume you're wrong. All right, at which point are you wrong then? Are you going to buy here and 6 months later Solana's down here? Then what? Maybe you're holding Solana from the lows, right? You haven't taken profit because you're now waiting for a bounce, but that bounce never comes. What are you going to do about that? If this scenario plays out, what will you do? So just some questions that you need to think about. How are you being objective by holding Solana and it's breaking down and you're still holding it and it's breaking down into this spot? Now it's at $125. Was this being objective? Or are you just in this for the long term because you think it's going to go to 500? Fine, then do that. No problem. But I'm talking purely from a trading perspective, is recognizing, and some of the best ways to approach the market is just asking yourself, all right, if I didn't have a position on this, what would I be looking for? Just assume you have no bias, no emotional attachment. What are you looking for? Okay. Now, I personally sold, publicly said it as well. I cashed out at 275 on the 19th. Price has sold off. I've only had one attempt at long in Solana. I was wrong on that idea. This was at round about, I think it was 220s. The minute that lost the level, I'm out of the trade. I'm now looking for this level here for a reaction. Can I get something in here and price continues trading this range, potentially into a lower high, into a lower low? That's what I would like to see, okay, from a trading context. But what I would like to see isn't necessarily what the market has to do. So I'm just going to react to whatever zones I feel I can long and whatever zones I feel I can short. If I can short this, because it could continue going higher. So the whole point of this is I'm trying to make you think objectively as today's session. Don't think emotionally just because you think Solana should be at $500 by the end of the year. That's not the way to treat this game, okay? It's not the way to go about it. When you look at the Solana chart, you've got a fairly decent node at 185. Okay, so some fairly decent bids resting in the book. 185s is a few dollars low. So at this low here, now essentially what I'd be looking for is to see how price hits this level and whether we get a reaction off that 185, 184, 183, or whether we just literally shit through this level and then we can't get back up, above 185. So basically that's this level here. There, okay. That's at 185. About there. Okay. That's the key level for me. So what I'm looking for is if we come back down, are we going to fill some of this into that key support zone? And then what I'm looking for is give me a low. So remember that structure that I covered last week. So if you got a low, you're looking for a higher low into this support zone, push away. That's my trigger to go long. I need to see acceptance back above here. If I see rejection and price bouncing between these two zones here and it breaks down, I have to get out. If I see price bouncing between these two zones and then push in, game on. Then we can talk about going to 210s, 220s, okay? That's how I'm thinking about price. So understanding the zones of where and how and what you need to see and why, okay? Because this is what's going to ascertain whether contextually you're going to be right on a trade or you need to get the fuck out of a trade. Yeah, at the moment, I'm only looking for longs. I just don't like the risk to reward setup for shorting this market. I could be wrong. There could be some very good short setups, but at the end of the day, it's not, I mean, when you look at this, it's not part of my system to short into this zone here. I can't short into that. No chance. And equally, I recognize, right, that I'm somewhat trading against the trend, because if you look at the daily trend scanner, that's rolling over, but we are coming into a level of demand. So again, this is why I talk about that trading is all about reactions, being reactive, okay? Not just because we're at a sport zone, it's a good time to bid this, or you need to see, look, 16-year-old analysis. Oh, look, price is into a level of demand. Buyers you really want to see this level hold. You could probably take a long. As long as this level holds, then price could go higher. Anybody can be an analyst, essentially. But what I've just given you on the lower time frames is to think about much more than just looking at a daily chart and calling this a zone that, of course, it needs to fucking hold. Anybody who's a first-year chartist can tell you this is a key zone that needs to hold. But what is it that you need to see? What do you need to see? Why, where, how? Those are the questions that they can't answer, because to them it's just a box. But there's so much more to it than that. It's about reading the final levels of price action and the flows and what's happening at the books, real-time execution, what's happening with Bitcoin. If Bitcoin is breaking down, Solana is going to roll over as well. So... But ultimately, yeah, I can't short this. There's no way in the world that I would short this. And like I said, look, I sold my Solana at 275, selling in here. So I don't have any position. I have no bias. I'm not emotionally biased. If Solana breaks down, it doesn't make a difference to me. If Solana rallies and I miss it, I couldn't really care less. All I'm looking for is there a good trade that I can take? If I can capture some of this move up here, my job's done. Take my money, walk away, wait for the next setup. There's no way that I'm buying Solana at $200 and holding it for the next 2 years, hoping it goes to $500. Not for me. No, thank you. Ethereum. Let's look at Ethereum. Yeah, this doesn't surprise me. I did not think that Ethereum is going to turn around from this anytime soon. I think we have to go through a phase of something similar to this here. Because if you look at what happened previously, right? Aggressive sell-off. Just look at this point of sell-off here. I want you to pay attention to this level here, okay? There's our range, high time frame range high, high time frame range low. Where does price sell off from? This level here. We'll do this in blue. When you run it forward, what did price do at this point? It's just trading within this range. You can see that, right? You've literally got range low, mid. The mid, this is the midpoint of this range here. Range low, midpoint, midish range, okay? Give or take. Run it forward. From 8th of August to the 29th or 30th of September, that's nearly 6 weeks of price action. Is that right? Yeah. You've got 3 weeks here. You've got 4 weeks there. That's a good 6-7 weeks. 8th of October. 2 months later, right? Now price is starting to push away. That took from August all the way through to November to eventually find initiation and break out higher. Now, when you look at the current structure, if you look at price here, we're on the daily. This is the key zone that if we get under here, pop above it, reject below it, that's going to be your cause for concern there, okay? Especially when you get below this level here, 3,000. Then it opens the floodgates for lower down. So we push up higher. We're below the level. Wicked into 2900s. It's still choppy, but like I said, watch for how price reacts off this key pivotal point. That invalidation, aggressive sell-off through it. We're now traded at the lows. We are contained within that same trading range as we had in August 2024 all the way through to November. So my question to you is, now that you've understood the context, what are your expectations over the next few weeks? Knowing that we just had an extensive sell-off like we had in August, are you really expecting this to be an alt season and just to go all the way up? Or is it more probable that after you've come off an aggressive range into a trend down, that we're likely just to oscillate between this zone here? And then how are you looking to trade this rotational environment? I don't know how long we're going to be in this range for, but all I know is that, does this look like a trend to you in here? Or is this just really low volatility, low average true range, choppy price action on a daily time frame? And it's periods like these where I step the fuck out of the market because I've got nothing to do here. This isn't my strategy. This isn't my environment. And part of being a good trader is understanding your environment. What environment are we in? Do you have a strategy to trade this? Are you a scalper? Are you a day trader? Are you more of an intraday trader or more of a high time frame swing trader? High time frame being 1 hour, 4 hour daily levels where you look for those inflection points like I do. Because as a more of a as an individual who looks for 1 or 2 good setups a week, I can't take a trade on this because there's nothing for me. And even still, if you look at the previous week, right, 3rd of February, this was Monday's low, and I believe Monday's high was this here. So if you go back a fortnight, we're still in that previous Monday's range. Monday's mid, February 3rd high, February 3rd low, February 3rd mid. There's really not a great deal you can do in here unless you're trading on the 1 hour or you're scalping on the 5 minute. But even then, all you're looking to do is trade the extremes. Extremes being this, that's your range formed. You've got another reaction point here, swing fail of this, but it's not for me. I'm not a scalper. So, but you can see where the reactions are coming in off, even on the lower time frames on the 5 minute chart. And this is actually a very good way to watch footprints, watch the flow. Generally, the best readers of order flow and footprints are scalpers. Generally they excel at reading order flow and footprints and looking for these quick moves, intraday moves for a scalp, whether it's 10, 20, 30, 40 ticks, whatever it is. These are the types of moves that they're looking to get a 2, 3, 4 hour trade off. But the key to all of this in terms of scalping is knowing the zones where you want to do your business. All right. You could long this, target these highs, stop at the lows. You're looking for a 2, 3 hour trader within here, and you're done for the day. All right. But I just want you to appreciate context on the higher time frame and truly where we are in the market right now. We're not in a trending environment. You've only got to look at the moving averages on the higher time frame. Let's just clear the chart. Let's go to the weekly. What do we have? For the first time, we've got this bearish crossover since August. That tells me that we are not going anywhere anytime soon. I could be wrong again. I just made a statement that I don't think we're going anywhere anytime soon. That's just a subjective opinion. Am I being objective about that? Absolutely not. Objective is identifying where I might be able to trade this. And right now, I don't have anything clear. It looks like shit to me. So until something structurally changes, or I believe that price comes into an area of value or fair, what I deem to be a good fair value, it's going to be down here. That's the level that I'm looking to trade. I'm not looking to trade this. I can go weeks without touching this shit. If this comes into here, I'll consider doing business. If this rejects off this high, falls back inside, I'll consider doing business back to the low. Okay. 2 areas that I'm looking to do business. Until then, I'll set my alerts. I've got nothing to do. I'm not looking to day trade this. I'm not looking to scalp it. I'm just looking for those 1 or 2 high time frame inflection points and let price come to me. That's where patience and discipline comes into. And because there's no setup on here, I'll look at something else like Solana. Maybe I can trade this instead if that sets up, okay? Let's look at, so ETH is a bit concerning, if I'm really honest. If you look at the higher time frame on the weekly, even on the daily, it's been in the downtrend since this year. So I did try to take the long, and as always, you know, I'm always transparent about where the trade didn't work out. I talked about the invalidation being at 3,000. The rejection happened. We're under the bands. As soon as price traded through here, I got stopped out. And that's all there is. My entry was 3,200, and I got stopped out at 3,000, just below. So I took a loss, but I've managed my loss. I'm now looking for reasons to step back into the market, whether that's long, whether that's short. I don't have anything setting up just yet. So again, just I keep banging on about the word being objective as a trader. You know, don't come out with ridiculous price targets. Look at what the market is presenting in front of you. Yeah, there's not much I can derive from this. I couldn't really care about what type of candle it is. It's more about the context, more about the structure here. So thinking of structures like this rounded structure, are we going to get another rounded structure where eventually, maybe later in the year, we get a rally in Q4? So that's the question I'm asking you. It's February now. You know, I hope I'm wrong. Hopefully this is a shorter form of consolidation that can trade higher again, but also be prepared that we might just be in this environment for slightly longer than we would like. Any questions? I'm not going to cover any altcoins because the altcoins are just too volatile. Maybe I'll cover XRP. I've made my intentions clear about XRP. I think it could squeeze higher, but anything in here, reject, I'll probably look to short it down. But I have to see the rejection to get into the trade. That's all there really is to it on XRP for me anyway. So is that clear? What did I just say about XRP? I didn't say, I'm going to blindly short it if it goes up there. I said that with that being the high and the fact that we've never had, if you go back to 2018, I should say, we've never had acceptance above 280 in 2018. Right now, we're rejecting off that level. So for now, taking almost the mid of this, if for whatever reason price does that, either we swing fill these highs here and get back inside, I'll probably look to take on the shorts, or alternatively, we reject here, close under here. I think that's it. We probably look to do business on this shoulder here. Break of the trend line. Game over. Back into this. And then, yeah, we'll see what happens after that. Sui is another one. I would like to see a rally on this because we have a break in market structure here. There's our shift in market structure, right? We've got, if I take you into the daily, you'll see it here. All right. So would you agree this is bullish market structure because you've got higher low, another higher low, another higher low. Okay. So these are your higher low points. What constitutes a break in market structure? I've got a question for you guys. If price trades below here, is this a break in market structure, yes or no? Is it a break in market structure? Why is it a breaking market structure? Is the next question. If it is, yes. And why isn't it if it's not? So, if this was a breaking market structure, what do you do if price does this? Now what? Now what's your stance? Was this a breaking market structure when the market rallies higher? All right, let me give you another example. Was this a breaking market structure? You have a high, you have a higher low. So this is where we're back. I'm not sure what happened. So is this a breaking market structure was the question. Yes, it was a breaking market structure because you got lower lows and you got lower highs. But do we agree that this is bearish? Well, not bearish market structure, but do we agree that these are lower lows and lower highs? Yes or no? And I remember talking about this in detail, and I was probably one of the few guys that was remaining bullish whilst people kept banging on about, yeah, but there's a shift in market structure. There's lower lows and lower highs. We're going to go down to 40K. What did I talk about? That in a range-bound environment, and this is where context comes in, right? You have to understand the context of price. Context. What was the context? What is this area? Forget market structure now. But is this a trend or is this a range-bound environment? When you zoom out the chart, what's the context of this? Does that look like a trend to you or does that look like a range to you? That's a trend. 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 That's a range. That's a trend into a range into a trend. This is a range that leads to trend continuation. So is this a trend or a range? It's just a range. So the key thing I want you to know and understand is that in a range-bound environment, context is king. Market structure, you can get lower lows, you can get higher highs. All right, assume we get a break, assume these are all lower lows and we get a break in structure. And now we've got a higher low followed by a higher high. And then it's a deviation. Now what? Do you see where I'm going with this? Why context is very important. Where you have clean market structure is in a trending environment, okay? When it's a range-bound environment, people get so sucked in on market structure from a contextual point of view without realizing what the actual context is. Okay? We are in a range. It's always very fucking choppy in a range. That's why context is important. So now when I go back to SUI, now that you recognize that these are lower lows, I'll go back to the previous example and ask the question again. right? The point I made was that we've had a break of structure here, but this isn't a break in market structure as such, because what would lead me to believe it is a break in market structure is that we need some form of lower high. Because what if this was just a run of these lows, it claims back inside and it goes higher? That is not a shift in market structure. The trend is still making higher highs. This was a shakeout, okay, if that happens. So essentially what we want to see is for price to effectively go from this type of environment into this range. We've already broken, taken out the previous, what was higher lows. We've taken this. What we now are waiting for is if should price trade into this, gets back above, rejects on the underside, that's your lower high, okay? That's the rejection, exhaustion of buyers you want to see. Aggressive sellers start stepping into the market. They hit it back down. Long start taking profit again, and then you get a lower low, and so forth, okay? So this isn't confirmation of a breaking structure. Yes, it's broken the previous higher low, but this bounce up and rejection will give you the confirmation of a shift in structure, all right? Run it forward. We are still currently in the range, right? Now, if this is to hold this as support and rally up here, then I will be looking to short that, anticipating that if we reject, this might be the short. However, if we find acceptance, then I have to cut the trade and accept I'm going to be wrong, because we could go higher, okay? Is that clear? Secondly, to be confirmed whether this is range bound or not. Okay? If you look at what happened previously, we had a rally, aggressive sell-off, price somewhat reclaimed the range, run the highs. Okay, so this is more of a up thrust after distribution, then it breaks down harder. Okay, so are we going to get something similar here, or are we likely to get a lower high and then break down into this? Okay. A range is whatever you define it. It's up to you what you want to define as a range. There's no right or wrong. It's what works best for you. But I can't pull off a clear range on this. Maybe I can. It would probably be something like this. This is a range low. This would arguably be the range highs. And the reason I say that is because if you go to the daily time frame, we're not really getting acceptance above this level. It's short-lived, okay? You get back above it, falls down. Gets back above, rejection. You've probably got this as a clear range. That's about as clean as it can get with regards to identifying a range. So even then, right? Even then, look at your inflection points. Market retests, rallies. Retests, closes back above. Retests, rally again from 280s to 370s, okay? Breaking down again. So the question I'm asking is, Sui is one of those where it depends on how the market flows over the next few weeks. I'm not really keen on this. I might just look for a long. But ideally, I would rather see price trade up into here, show me signs of exhaustion, I'll take on the short. Okay, I could be wrong on the short because price might just rip up, take out these highs, and then get back inside and then roll over. Okay, but that's where risk management comes into play, and I have 2 attempts at shorting this. And it may not even rally. This might be just another lower high. We've had a break of this low here. You can see we broke the low, we closed back above it, we've lost the level. That's the reason to get out of the trade. Look at that. The minute price gets back above, it can't seem to reclaim this level after losing it. People are scrambling to get out of the market. Whoever's been long in this, they're offside. They want to get out of break even. Often you see rejection on the underside, sell off, continuation lower down, okay? So let's just see what happens, whether this can somehow rally into March for a lower high. And if that rejects, then I think we probably will be going lower down, all right? All right, folks, I'm going to wrap it up there. I think that's kind of enough of a stream. But in all honesty, if you really want to keep it simple, just use the Exo Trend Scanner. You'll save yourself a lot of fucking pain. Don't piss against the wind. And right now, the tide is going lower down. The only time where you really want to be longing these type of structures is... First of all, you're longing against the trend. Secondly, you want to see the bands come in and compress. Price starts chopping around, builds a range, okay? And then it goes. Very rarely do you see something like this. And if you do, then it's probably news-driven or event-driven, and it's probably going to be short-lived and die again, all right? But for now, if you just look at the bands on the daily, you go to the weekly... Doesn't look like a trending market to me. I think we could, if the market holds this level, then I would say we could be entering a phase of price action being rotational. In here, okay? Some forms of rotations. Not to this extent, but you get the gist. So understand the context. Understand the context, think objectively, and let's see what happens. All right. Is it still cutting out? If it's cutting out, it's probably a sign of me to leave then and call it a day. Hello, Paradigm. Good to see you. But look, I hope that makes sense. And that's all I can say really, is that we'll just have to wait and see what the market gives, ultimately. But I do have some level of concerns, and again, based upon on the higher time frame, just looking at the weekly MACD, my rule of thumb is that whenever this crosses over, I've always taken caution about what comes next, and it very rarely lets me down. So just something to bear in mind. This has to hold. And if it does, and we get a reaction, there's a trade setup back to the highs, okay? If it doesn't, then I guess we're in a spot of bother. And alts go even lower down. And then that's all there is to it. Acceptance for me, could you define what acceptance is to you? 1 hour closes, daily close, building of a base. For me, acceptance isn't time-based. It's how price reacts at a level and then reclaims back inside the previous value area high, value area low. So again, something I'll cover when it comes to market profiles, how to find acceptance back inside a range, what that means, okay? But ultimately, look, on Bitcoin, like I've discussed, the 3 levels that you really want to be marking out is December's high, December's low, And then if you go on the weekly time frame, you've also got this daily demand zone here, right? But that's on the daily. If you go into the weekly time frame, we have not had a weekly close above 104. So any price action above that level and price gets back inside, sign of weakness. Okay. And equally, any price action below the weekly low of 93K, because we haven't had weekly close below 93K. So should price trade into this level and then gets back inside, I'd be looking for the reversion trade back to the weekly range, weekly candle close high of 104s from 94s to 104s. If price finds acceptance below this weekly level of 93K and we can't get back inside, that is a possible cause of concern. The longer we spend under there, then the greater the concern and the probable risk increases to the downside, okay? That's all there is to it. So they're the key 1, 2, 3, 4, 5 zones that I would mark out. They're the key zones that I'm using as pivotal points for looking for trade setups that I covered at the start of the stream. All right, and that's it. That's all there is to it. I wish you all the best. I hope you have a great week ahead. I'm going to be very patient in terms of trading the market and essentially letting the setups come to me. I'm not looking to force any trades. I'm just looking to flow with the market in the direction of the market and let the market show me what's coming next and then to react off that information. All right. Wish you all a great week ahead and I'll catch you on next Sunday stream. Take care, guys. Bye-bye.